Welcome, everybody. It's a pleasure to be here. Our tagline is a clear path to transformational growth. It's clear because we own the assets that are going to take us from a junior producer to an intermediate producer within the next 4 to 5 years. Our main asset is the Avino mine. We've got a portfolio of 3 assets, so we're going to go from one producing asset to 3. So we're going to produce this year between 2.5 to 2.8 million ounces of silver equivalent. The second asset is La Preciosa. We acquired for Coeur Mining in 2022 for $30 million US. They paid $358 million acquiring that, so it was a creative acquisition for us, and we've already broken ground. We've got the permits, and we're planning to haul that material to the Avino processing plant 19 kilometers away, so it's a low capex, and we have all the funds in place. And our third asset is the oxide tailings project. This is leftover waste from when we opened pit mined in the 70s and 80s. We've owned the asset for over 50 years, and we've been mining for over 40 years. Currently, we operate at 2,500 tons per day, and we have 490 employees. This asset, we completed a pre-feasibility study, which we'll tell you about shortly. Large silver equivalent resource base, 277 million ounces of M&I, 43101 compliant, 94 million inferred. 60% of this is pure silver. These are the catalysts for growth, going from 1 to 3 producing assets. Here you can see Avino is located in the state of Durango. It's on the Sierra Madre trend. Billions of ounces of silver exist on this trend. They got mining in their DNA. They've been mining there for hundreds of years. And Avino has the special distinction of being the first mine discovered in the state of Durango in 1558 by Captain Ibarra of Cortez's army. Most people's reaction is there can't be much left, but there wasn't a lot of exploration done, so there's a lot of opportunity there. And the beauty of that is infrastructure. We're surrounded by villages, which make it a safe place. It's in the high desert, it's in rolling farmland, it's a busy area. Here's our production forecast. We put this together prior to the rally, so we're already considering reimagining this, but the dark blue represents the producing Avino mine. The lighter blue represents La Preciosa, which you can see will have a meaningful contribution in our output next year, and that is by grade alone. It's not by building another mill. So a 30% growth in our output from La Preciosa. And then oxide tailings comes online in 2028, 2029. We want to get up between 8 to 10 million ounces by 2029. And so the production profile, so this year 49% of our revenue comes from silver, 19% from gold, and 31% from copper. That's going to trend higher as we bring on La Preciosa. La Preciosa is 90% pure silver and 10% gold, so it's going to make a big difference in our revenue for silver. And also, we've been drilling there, and the results have been much favorable than what this suggests, so it's possible that the silver revenue could increase. Highlights from Q2, revenue is $21.8 million US, gross profit $10.2 million, net income $2.9 million, free cash flow $4.4 million, cash cost per ounce $15.11, and $20.93 AISC. So it's got good margin today, and with the onset of La Preciosa and the higher grade, we expect to go sub 20 next year, possibly between $15 and $18. And then with the third asset, it's got a low AISC that could bring us in the low teens. 37.3 million cash in the bank at the end of the quarter. Today we have over 50 million in the bank. So we're unleveraged, unhedged. We've got no debt other than equipment debt. One of the cleanest balance sheets out there. Here you can see everything's positive. Free cash flow 1,000% higher than the year prior for half the year. And so here's the cash cost. You can see $15.11 cash cost, $20.93 all-in sustaining. So good margin at today's prices. Now here's something we're really proud of. Our cost per ton, almost unheard of in the business, below $100 all-in sustaining, 52 cash costs. The reason why we're able to do it so cheaply is because we long hole sub-level cave. It's a stockwork system. It's very big. It's 30 to 50 meters wide and 500 to 600 meters of strike. So that's what we're mining at Avino right now. Recent updates. So last week we got included in the TSX 30. These are the 30 top performing companies on the TSX. We were ranked 5th. We got to ring the bell last week, so it was nice to be included in that group. Our share price has risen over 600%. Corporate transactions, so delevering the project. We bought back the royalty on La Preciosa. There's no royalty on La Preciosa, so our shareholders are going to feel the full effect of the blue sky going forward, especially if metal prices can stay where they are, let alone grow. It's going to be very profitable for us. At the Avino mine, highest mill throughput in Avino's history, increased 36% in Q2. And drilling at La Preciosa. So our resource grade is 200 grams. And when we went to, and this is the information that Coeur gave us, they were planning an open pit mine, so it was heavily diluted. So we wanted to go and resample the Coeur samples from Orco and Pan American, but there was no samples left because they did so many studies. So we went and did our own drilling. And what did we hit? 7.9 meters of 1,600 grams of silver equivalent. This is where we're heading right now to mine. This is going to be making its way into the mill next year. Here's the location. La Preciosa is 19 kilometers away from Avino. You can see it's in the high desert. There's farms there, communities all around. We've got all the ingredients. We've got a dedicated power line. We built it, 20 kilometers long, capable of 5 megawatts. We're only utilizing 3. So we have excess capacity for our third asset, the oxide tailings, when we go to build that out. Paved road, door to door. It's an hour drive to the major city of Durango, where there's 750,000 people. So this is very unique for a mine to be so close to infrastructure and people. And we're proud to have 100% Mexican labor force, right up to our chief operating officer, who's here in the room, Carlos Rodriguez. He's been in the business a long time. He worked for Lewisman at the San Dimas mine, made a big discovery there, and they rewarded him by sending him to Colorado School of Mines to get his degree. First-class person. If anyone has any questions, you can come talk to him later. High water supply. So we built a dry stack tailings storage facility where we're not mandated. Because we're shareholders, everyone in the management of the company are shareholders, we didn't want a catastrophe as we build out and expand our operations. So we built this dry stack, and currently we're backfilling our open pit to make it safe. It's a form of reclamation. Here's La Preciosa. Look at this, 1,500 drill holes. It's been pin cushioned, $90 million spent by Pan American Silver, Coeur Mining, and Orco. So we have a very good understanding of these veins. You can see they're all red. So that represents between 150 and 500 grams of silver per ton, all ore grade material. Here you can see hot zones above 500 grams. The resource on La Preciosa, 17.4 million metric tons. There you can see the silver equivalent grade of 200 grams. And then another 4.4 million metric tons of inferred. So this is for an underground mine. When Coeur had it, their cutoff grade was 60 grams, and the resource triples. So if Mexico decides to change their view on open pit, the resource triples overnight. And how are we going to mine it? So we got the permits in Q1, and we started blasting in April. Just a 4 meter by 4 meter trackless decline ramp. Rubber tire trucks can go in there and mechanize mine it. So we're mining now on La Gloria and Abundancia and ramping down to put in different levels. And we're also looking at amending our permit to add more portals to go. Now that we have more money, we're going to go in and see if we can pull more of that high grade out faster. Here you can see some of the drill holes. So I mentioned the top one earlier. There's the other hole was 6.42 meters of 544 grams of silver and half a gram of gold. This is really good material that we can't wait to feed through our plant. Brand new equipment. We had a year to plan in advance while we were waiting for the permits. We ordered new equipment. We have credit facilities with Sandvik and Caterpillar. So this is $1 million drill that's brand new on site, under warranty, and then with Caterpillar comes with simulators. So we're training our people to use this equipment, and so the local people in this area are very happy to get these jobs. There's the first blast in April. And then here's the third asset, the oxide tailings. So we drilled the toe of the dam back in 2016, and we did a PEA, and Tetra Tech had recommended upgrading the level of certainty by grid drilling the rest of it, but we couldn't because it was an active tailings dam. It would have been too dangerous to put a heavy drill on a wet pile of sand. So during the pandemic, when we shut down the mine to build the dry stack, we let this tailings storage facility dry out. We grid drilled it. We did 150 drill holes, metallurgically tested it, and did a pre-feasibility study giving us reserves. So here you can see the outcome of that study. So if you look below the table there, they used $20.45 silver and $18.40 gold, and it gives us a positive NPV post-tax of $61 million, but at spot it's $161 million. So this is going to be a big contributor to our output. $49 million capex. And if you look there, the cost per ounce, $9.71 per ounce of silver equivalent, $10.23 an ounce ASIC. And we'll hire 120 new people, and it'll have a major contribution to the area, the local economy. And here's our global resources. So if you look down where it's yellow there, 53.1 million metric tons of measured and indicated, 23.8 million tons of inferred. Combine that together, you're looking at 76 million tons of resources, and our mill can do 750,000 tons on an annual basis. So this represents 100 years of mine life, long, long time. So we're not going to wait 100 years. We're going to finish our drill programs this year, and then we're going to bring in an engineering firm to reimagine both projects and possibly look at much larger than 8 to 10 million ounces combined. CSR initiatives in the communities close to Avino. So Avino is committed to using the United Nations Sustainable Development Goals. We've been fortunate that our trading partner, Samsung, has donated 150 Galaxy tablets and 25 televisions that went into the local schools to make them happy. And we've received an award, an ESR award, for the third year in a row, which is awarded by an independent board of philanthropists in Mexico, so we're quite proud of that. So key milestones, so I mentioned all these, so what's coming up? First production from La Preciosa, and actually it's going to start making it through the mill in Q4, but commercial production will be declared next year. Completing the 2025 drill program and coming out with our maiden reserve calculation in Q1 next year. Research, so there's research analysts, so you can reach out to them to get their reports. Trading and capitalization summary, so about 630 million market cap, 52-week range between 85 cents and 475. We're trading around 415. 78% of our company is owned by retail, 17% owned by institutions. There's over 71 institutions that own our stock, and 5% is owned by insiders. We have a liquid stock, trades between 5 and 6 million shares a day on New York. On Friday, we traded 10 million shares. Today we announced Van Eck included us in the GDXJ, so that's happening on Friday. So that's going to be more liquidity for us. 152 million shares issued, 10 million shares of options and RSUs, no warrants outstanding, 162 million fully diluted. I'm the single largest shareholder outside of the ETFs. And I encourage everyone at our firm. Carlos is probably the third largest shareholder, so we all believe in what we're doing. And key takeaways to wrap things up, it's a primary silver producer and explorer. Expect drill results coming out before year end, quarterly production results, and earnings. Strategic growth plan, it's organic. We own the assets. It's not opaque through M&A material. You have certainty with us. And index inclusion. And the big thing is La Preciosa. That's going to really move the needle on the company, on the output and the profitability. Right now, our margins are over 50%, and we're expecting it to go even higher. Cash on hand, I mentioned now, is up near 50 million. And the leverage to metal, 277 million ounces in M&I. What else can I tell you? We've been in business for 57 years. We've got a really strong balance sheet and good trading liquidity. And with that, I'll wrap it up and open it up for questions.
Great run through, David. Any questions on the floor?
I think it was Gonzalo mine that you closed down, but there was resources there. It just it didn't make sense to mine it at the price. Is it a possibility that you might consider bringing it back to life?
Carlos, he's here. Yeah, we were talking about that recently. Well, when we went down to the bottom level, it's a different style of mineralization. It's low sulfidation, so it's lateral in nature. So we drilled the extent of it at depth, but along strike there's possibilities. There is some areas where there is ore in there, but we'd have to bring services back in there. So we are considering it. Thank you. Any other questions?
There's a lot of potential in the portfolio. Does M&A play a part at all in the future strategy? Potentially. I mean, right now, the market's valuing us on a price to net asset value at about 1.2 to 1. So if you look at MAG, they got taken out at 2.2. So there's room to grow before we look to use equity leverage or do M&A. I mean, we have a clear path, as we mentioned, through our own portfolio. So that's our focus right now, is to remain disciplined in our capital allocation. What are the key items that investors should be watching through the ramp-up of La Preciosa?
Well, the grade, we're going to be reporting that, and we expect it to be much higher than 200 grams, evidenced by a few drill holes that we've made. We're going to be coming out with more drill holes, so keep an eye on that. Yeah. That's it.
All right, David, thank you very much for spending time with us today.
Have a great conference.